Welcome back to Viva America, the only show where you potentially can be more American than Americans. Let's start with Jim Cramer because now the guru from CNBC tells us that apparently the electric vehicle market has peaked. That means it's time to go long, boys. Remember, financial fake news. Nothing against Jim Cramer, but definitely his track record indicates that you can play in different ways, mostly against him, and still make a decent coin. Now, he's not the only one promoting this. It's all over Twitter, because remember now, Twitter is a place to be. Now, a lot of it happening today as well is how everyone is laughing at Tesla. You have, for example, the Tesla Twitter account posted or tweeted, Model Y just broke the best-selling car record in Norway, held since 1969 by the Beetle. You know who actually runs that company? It's Volkswagen. And then this guy, sentient human being, your stock, Tesla, is also the best-selling stock in the market today. Thank you. What a way to roast Elon on that particular case. Now, coming back to Jim Cramer, you have to understand that one of the other things that I like to look is for potential financial fake news in the market. And you have to understand that whatever is published, it doesn't matter if it's on the New York Times. Well, as of recently, the New York Times, a little bit debatable. They can say whatever they want, but the point is not to take offense in what I'm sharing. It's understanding how you can play the narrative in your favor. Pretty much it's about moving the odds in your favor, especially when it comes to short-term and medium-term trading with options, okay? Now, everyone is so happy, but if I take a look at my technical tools, and I love Hawkeye traders, there's a lot of people that they use stock chart, bar chart. I'm using TradingView and the indicators all coming from Hawkeye traders. Thank you, Randy. And Nigel, of course, Nigel. Now, looking at the levels, these are liquidity levels. First level, drop, cut through it like butter, knife through butter, all the way from 181, now sitting at this level, under the level, and you have 132. Next key, liquidity level for Tesla. Quote me, please. I want you to quote me. It's $92. $92 for Tesla. Do you think it cannot make it there? It's not about if it will or if it will not. It's about how you are going to position yourself. Now, the reality is that from this level to the next liquidity level is only 25%. Now, for the size of the company, it's huge. But if you're looking to buy this, potentially the risk-reward ratio start actually favoring the long side. Now, the other piece of information is for us to understand a little bit of surveillance capitalism. And what you want to understand is that you cannot play the game with the same tools you've been playing the games for the last 10 years. All right. So that means that you have to look further. Now, guess what happened yesterday? I want you to look right here. Take a look at this. Let me see if I can bring my tools, my pencil and everything. Okay. Let's see. Perfect. Okay. Let's take a look. And I want you to pay attention to this particular contract. This is a call contract. And I want you to focus on this section. Yesterday, volume was close to 18,747 contracts versus 52 contracts, well, 52,000 contracts in the open interest. Now, if I were to pay attention also, there's a little bit of what we do at MSA, Market Surveillance Alliance, and we look to pick that scent of, I think the camera stopped, but we're just going to continue, okay? Otherwise, we won't have any video today. So basically, that 18,000, from that point, one trader, she or he, I don't want to be accused of being a sexist, she or he got 3,620 contracts, all right? 3,620 contracts. That means that someone rotated close to $820,000 betting on, this is the contract for, take a look, is a contract expecting Tesla to be trading close or above 400 by January 19 of 2024, all right? Now, the reality is that this contract, if you look at this level somewhere here, take a look, around December 12th, it was around $7. By the end of November, it was around $10. Do I need this whole thing to go to 400? Not at all, not to make money. It can potentially double my money from this level, and why not? If it actually traded at $7, I can look for $6 as my potential upside target. Now, remember, and let me pause the video, see if I can come back because my video just stopped, okay? 1 second. Let's see if I'm back. Now it's still frozen, but I'm here. You can hear my voice. Now, the most important is to think, okay, if I want to invest in Tesla, I don't have to take, for example, $12,000 by 100 shares. I can take from this point, maybe I want to take 10%, maybe I want to take 15%. And let's say I take $2,000 and I'm going to bet on a recovery, because pretty much Jim Cramer is telling you that he doesn't see it. That means that he's pursuing his own agenda. Again, I have nothing against you, Jim Cramer, but we know. So basically, you take $2,000 from potentially 100 shares and you expose less capital. You can have these dry ammo for future ideas that you want to invest or you want to trade. Now, with $2,000, I will go ahead and buy $1,000 at around $250, max $260. Last trade at $230, and then if it drops to $1, I will add another $1,000. So $1,000. That probably four contracts at $230, and another $1,000 for the eventuality that it drops to $1. If it drops to $1, then I will probably go for 10 contracts, just making sure I buy every contract at $1, and then I have that exposure, that positioning into the next year. It's a long-term opportunity playing options. What it gives me is I reduce the risk of the upfront capital that I need. And if it doesn't work, I only lose about 15% of my capital. I won't be early. I won't be telling you that I went to Harvard and I'm early in the position and down 60%. I won't do that. I will actually play the market accordingly, measuring my risk and looking for a decent risk reward. And the most important is that I will be looking for asymmetric risk. I will lose little, but if I win, I will win big time. So guys, remember, don't just fall for what it is. Key levels, Hawkeye traders indicating it's red. This whole thing has been red before, and from that point, it actually went up with different circumstances. Not only the fact that the Federal Reserve was with a low interest rate environment. So there are a lot of things that can happen short term. I wouldn't be surprised for another drop of 25%. I already shared with you how to position yourself and play Tesla accordingly. If you guys want to know more about MSA, Market Surveillance Alliance, what I do, please don't doubt to visit my website. I'm working on it slowly. It's just me. So it's just me for now, but I'm actually expanding my team in 2023. I think there's a lot of stuff that everyone has to learn about options. There's so much research to do, so much to teach, and so much to offer when it comes to trading options on US stocks. Guys, thank you so much. This has been Viva America. And remember, at the end of the day, someone always, that's right, someone always knows. Ciao.